This is the market update segment of Business Today, and today we are joined with Arshad Ismail, an associate of Frontier Research. Good evening and welcome to the program.
Right. Good evening and thank you.
Okay, so let's start off by talking a bit about the policy rate hike.
Right. So I think the policy rate hike is something that's been the talk during the last week. So if I'm to give a broad, maybe overall look about what these policy rates are, so it's one of the main rates that the central bank uses to signal its monetary policy stance. So maybe on a normal day, right, maybe pre-COVID, pre-crisis, we're looking at around a policy interest rate of around 6 to 7%. We saw these rates going down during COVID, and then there was a surge in the rate, a sudden surge to around 13.5 to 14.5% towards April last year, when the country realized that they were going towards a crisis.
Okay.
And since then, since somewhere around July, the rates were kind of stabilized at around 14.5, 15.5%, right? And given that inflation was coming down, I don't think many of them expected a policy rate to go up by 100 basis points. But you know, things change, right? So we did see a sudden 100 basis point increase. So currently it's at around 15.5 and a 16.5%. So one might wonder, what does this really mean to the market interest rates? I think it's a little too early to say, right? So what the central bank presumed is that they're looking at bridging the gap between the market interest rates, the treasury bill, treasury bond rates, and the policy interest rates. And also it's something that the IMF has imposed, right? So that we could bring down inflation, so that maybe the country goes more towards a more stabilized path. So I would say this rate hike that has been proposed is more of a IMF friendly move, right? So that we can secure the 2.9 billion funds. Yeah, right. That's about the rates.
Okay, and let's touch a bit on treasury bills and treasury bond rates.
Right. So currently, if you look at treasury bill, treasury bond rates, so I think it's at a very high rate, right? So the investors have been compensated for the risk that they're taking because of a domestic debt restructure and also because of the high levels of inflation. So you're looking at current treasury bill, treasury bond rates going to around 30% annually, so that's a very lucrative rate to the investors.
Right.
But the thing that you're looking at is, with high rates, there is a catch, right? The catch that we're talking about is a domestic debt restructure. So what could really happen is, in case a restructure happens, this maybe the investors could have a maturity extension. They could maybe end up getting paid lower coupon rates. So they are, at the end of the day, they're going to have a haircut.
Okay.
So, yeah, that's a bit about this. Yeah.
Right. And what about investments and economic growth?
If you're looking at investments, right, so on a normal day, right, I think investments mainly depend on the interest rates of the country. So the higher the interest rate, the lower the investment. Simple econ. So if you look at current these days, the average lending rate is going at around 25%, right? So to what extent can businesses borrow at 25%, and to what extent can they actually cover that cost?
Okay.
So businesses currently are very selective, right? They don't borrow just as it is, right? Only if they feel that it's a very lucrative investment, they go towards it. Same thing with households as well, right? Now, if you look at people like you and me, we don't take credit cards these days, right? Given the very high interest rates, we're quite reluctant on that. So these high interest rates have brought down private investments, and it has also brought down consumer spending, right? So what does that lead to? What does that, let's say, how does that affect economic growth, right? There is a immediate negative impact on that, right? Given that consumption is going down, given that investments are going down, right? So we don't have a number as of yet, right? But what many economists predict is, for the year 2022, we're looking at around close to around 8 to 12% of negative economic growth. So how severe this is that this is the worst that we would have since independence. So since 1948, this is the worst that of economic growth that we could have. Even if you look at the year 2020, with COVID and all the lockdowns that happened, we only had a 3.6% of a negative growth. So we're looking at around 8 to 12% in 2022. Maybe that could also, what many economists say is that probably towards 2023, the first half would also still be bad, right? Until the IMF funds come in, right? Still the rates are very high. So that would also affect economic growth, maybe towards the latter part of the year, right? Once IMF funds have come in, the economy is stabilized, there could be maybe a boost in investments, household spending, and there you could have some sort of economic growth.
Okay. And why do you think these rates are so high?
So it's a tough decision, right? It's a tough decision for the central bank to make. So if you look at central bank on one side, I think even they're stuck, right? So they either need to prioritize price stability, or they need to look at having higher economic growth. So both of this is contradictory, right? So currently what the central bank has looked at, they've looked at price stability. So they've increased interest rates, right? The higher rates have brought down investments. They have it has brought down consumer spending, right? So that has helped curtail inflation to some level. So if you look at inflation levels, it did peak somewhere towards September, October last year, right, in 2022 to around 70% year on year. But now we see it gradually coming down to around 50%. And even in terms of monthly inflation, right, which was at a higher level, is now at around 1 to 2% at a monthly level. So there is some sort of stability that is coming towards prices. So that is the role that these rates have played. So the high rates have been detrimental for economic growth, but they have definitely brought down the price levels, right? They've helped stabilize the economy to some extent.
Okay. Now, let's touch a bit on exchange rates.
Right. So again, a big topic, right? I think exchange rates, so if you look at, right, what most of us remember is the exchange rate pegging around the 200 mark, right? We saw it jump up all of a sudden to around a 360, right? And since then, it was kind of stabilized, right? Given the variation limit that the central bank has had, it has been stabilized over the 360, 362, right? And what happened, if you look at during the last week, right, during the past week, we saw that the central bank increased this band variation, right? It went from 2 rupees 60 cents to around 10 rupees now. So what does that really mean is that, for example, if you look at, let's say the middle exchange rate is at around 345, right? It could vary to 335 or even to a 355.
Right.
So now there is a big variation gap, right? And also we saw during the past couple of days, the governor announced that we are looking at a free float for the exchange rate.
Right.
Now, if that comes into play, right, we're not talking about any variation bands. Exchange rate is completely going to be dependent on demand and supply. So what could happen then, right? It's very hard to predict. But maybe my opinion is that there could be a slight appreciation given the positive sentiment that comes in with the IMF funds. But overall, given that it's based on demand and supply towards the latter part of the year, given that demand starts to pick in, right, more imports start to come in, right, maybe if the import restrictions are reduced, and maybe once we start repaying our loans as well, right, there would be a lot of money that goes out, right? Exchange rate gradually, eventually could decline. Slight appreciation at the beginning, but you know, there could be a normal trend of depreciation, but we never know, right? We could be open for any surprises. There could be delays in the IMF funds. There could be increases in world market oil prices. So you never know on the exchange rate.
Right. Now, when you say towards the latter part of the year, is there like a rough estimate of around which time? Is it hard to tell?
It's a bit hard to tell. It all depends, I would say, on when this IMF funds would flow in. So we're looking at, the governor says they are optimistic about the funds coming in March. That's this month. But to what extent, right? It all depends on how the debt restructuring goes, right? Will China agree on the terms, right? So it all depends on that. So, but even what I also mostly feel, I don't think there would be a big delay, right? We're looking at somewhere around maybe March would be great, right? Or maybe towards April and May. If that funds come in, right, there would be a appreciation, and later towards once rates come down, right, so once the government feels that inflation is controlled, they would bring rates back down. So then there would be demand for imports, right, once again leading to a depreciation of the exchange rate. Okay.
Now let's speak a bit in detail about the IMF program, which is due inflation.
Right. So IMF, this is not the first time that we are going to, right? So this is the 17th time, if I'm not mistaken, that we are going to IMF.
Okay.
And if you look at most of the past IMF programs that Sri Lanka has gone to, half of it has failed, right? So now there is a risk whether this one would fail, whether this would succeed. So all of it depends on how the country plays out. So we did come into a staff level agreement, right, last year for a 2.9 billion of funds. But what one must need to know is that this 2.9 billion doesn't come all at once, right? But that's what most of the public thinks. They think that, you get the 2.9 billion, everything is sorted. It comes in tranches. So probably maybe a 500,000 at the beginning, 500,000 million, right? A little by little. But why is this important? Is that once IMF starts funding, it builds confidence in the economy. Then you would have all other multilaterals, the World Bank, ADB, supporting Sri Lanka. So that IMF fund is very important. Given that it comes, the others would also flow in. So we're looking at, somewhere towards March, maybe April, right? And eventually, but the worst thing is if there is a delay, right? Maybe a month or two delay is manageable, but if you're looking at a delay of around 6 months, that could be very detrimental. We could go back to our maybe long queues without fuel, right? Maybe again, we could end up with long power cuts, right? So there could be so much of problems that could follow. But for now, it looks all right, but you never know.
Right. Now, once the funds start coming in and the World Bank maybe shows a bit of support as well, how do you think the standard of living would change? Would it immediately go, obviously not immediately go back to the previous stage, but how do you think it would transition?
I think the current standard of living is actually gone down, right? If you look at, you don't even have to look at official numbers, right? I think something like you and me both can relate to, right? Even in terms of the food that we have, if you look at official numbers, we've seen poverty levels increasing now, right? Given that there is high levels of inflation, food inflation especially, right? Poverty levels have gone up. So standard of living has kind of deteriorated, right? Now, what one must need to realize is that suppose inflation goes down, right? That doesn't mean prices have gone down. Now, when you look at inflation, you look at year-on-year inflation, right? So if you're looking at very high prices last year in December, and suppose, let's say this year December inflation is 10%, it means that compared to last year December, prices have gone up. So prices are still high, right? Even though it's a 10% number. So I don't think people's incomes have gone up, especially the ones in the public sector, especially the daily wage earners, right? I think they're feeling it really hard. So living standard wise, I think the rich, they're okay, right? I think it's the middle class and the lower class who's actually got affected. It might actually take some time. I don't see it recovering and getting better all of a sudden just because IMF funds come in, maybe by the end of this year. I'm looking at least a 2-year, 3-year framework. So once the IMF program is over, if the country does follow it properly, does stabilize the economy, maybe towards 2-3 years, we could have some sort of improvement in the living standard.
Okay, and is there something that we could do to help you and I, or maybe even those of us who are living abroad, is there something they can do to help Sri Lanka at the moment?
Or maybe something that people could really look at. I think even something that the politicians have opted for, right? For the ones living abroad to send in their worker remittances. I think that's one thing that they can look at. Now, I do understand that, the informal exchange systems like Undial, Hawala might give you a little bit of a higher rate, right? Maybe a 10 rupees more for the dollar. But that could be very detrimental to the economy. So if you look at Sri Lanka, looking at foreign currency flows, we mainly depend on our tourism, right? Badly hit by COVID, trying to recover now, right? We have inflows from our exports of garments, right? Again, because of inflation kind of hit, right? And then there's worker remittances, right? So worker remittances is a very important thing. So for the ones working abroad, right? Maybe if they could send in their cash through, let's say, a legal source, that could help. And also maybe as responsible citizens, right? Trying to control our demand to some extent, right? Maybe opting for more Sri Lankan products, right? I don't think it's a thing that it's easy to be done, right? But at least it would prevent the outflow of funds. And given that the governor is now looking at a free float of an exchange rate, right? All of it would help to minimize the amount of money going out. But those are all, again, very small amounts, right? Because once we start repaying loans, once we start repaying all of that, we're talking about billions and billions going out. So there is not much an individual like you and me can do, right? But maybe to some extent, collectively, we could make a small impact.
Okay, well, thank you so much for that insight on the market. That was Arshad Ismail, Associate of Frontier Research. Thank you once again for being with us this evening.
Thank you.
And that concludes today's episode of Business Today. Do join us next time as well. Till then, have a good night.